So this is a presentation on depreciation of assets specifically. And depreciation is the allocation of periodic expense of assets for the different accounting period. Depletion is the reduction in value of natural resources, while amortization is the reduction in value of intangible assets. Now, these three terms simply refers to reduction in value. However, the reduction in value are for different items. Depreciation is a reduction in value for assets, tangible assets, assets that can be seen. For example, um, motor vehicles, for example, furnitures and fittings. Depletion is also a reduction in value, but for natural resources like crude oil, gold, and copper. Amortization is also a reduction in value, but for intangible assets such as patent rights, copyright, trademark, goodwill. But we're going to focus more on depreciation. How do we compute depreciation cost? There are different methods that can be used. The first is the straight line method. As the name implies, it's quite simple, easy to understand. It is straightforward. It's simply a particular amount being reduced yearly on from the value of the asset, a particular amount, a particular and equal amount that is spread across the useful years of the asset. For example, if a firm acquires an asset for 250,000 and the asset is meant to last for 10 years, the depreciation cost will simply be 25,000. So 25,000 will be reduced from the value of the asset every year for the period of 10 years because the asset has no scrap value at the end of the 10-year period. Then we have the revaluation method. The revaluation method is used to compute depreciation cost of used tools and livestock. For example, an asset costs 110,000. If it's revalued, when revalued after 2 years, if it is 45,000 naira, then the depreciation cost will be what? So depreciation evaluation method is also used to determine the depreciation cost. The valued amount is subtracted from the cost of the asset to derive the depreciation cost. We also have the machine arm method. This machine arm method is used when an asset depreciates as a result of usage. As a result of usage. So it is derived by subtracting the value between the scrap value and the hour of usage. In other words, when you divide the scrap value by the hour of usage, you subtract what you get from the cost. Then we also have other methods such as the sum of the year digit method. We have the double reducing balance method. We have the annuity method. We have the reducing balance method. But the commonly used methods for depreciation are the straight line method and the reducing balance method, the commonly used, and sometimes the sum of the digit method. A method of accounting for depreciation. How do we account for this? Number one, the depreciation method. And so at the beginning of the year, you debit depreciation and credit asset with depreciation cost. This is how to account. These are the steps to account for depreciation. At the beginning of the year, debit depreciation, credit asset with depreciation cost. And at the end of the year, you debit income statement and credit depreciation with the depreciation cost. So that reduces the value of the depreciation, while the depreciation cost is an expense in the income statement. Then we have provision for depreciation. This is the most preferred method and is simply done. The accounting entry simply debit income statement and credit provision depreciation. Now, disposal of assets. Assets can be disposed. Assets can be disposed. So when assets when asset has served its purpose and its functionality begins to deteriorate due to the usage, it comes to a time when the asset needs to be sold. This is because the asset can no longer produce a maximum capacity. So when an asset is beginning to get old, and an asset is beginning to lose its strength and its functionality, it can be disposed. When such occurs, the sale or the disposal must be reported in the books. Now, assets can actually be disposed at a profit or a loss. Even though it's a disposal, it could be at a profit or at a loss. And that can be ascertained by comparing it with the value of the asset as at the date of disposal. In other words, the depreciation cost will be deducted from the cost of the asset to derive the book value of the asset as at the day of disposal. And this amount is compared with the sale or the amount the asset, excuse me, is compared with the amount the asset was disposed at to ascertain if it was a profit or it was a loss. Now, the accounting entries is a debit asset disposal account and credit asset with the cost of assets. Then you debit depreciation and credit asset disposal account with the depreciation cost. You debit the bank and credit asset disposal account with the sales value. So you ascertain the depreciation cost, like I said, offset to get the value of the asset. Then when payment has been received, debit the bank, you credit asset disposal with the sales value, debit asset disposal and credit income statement with a profit. Here, as if it's a profit, but where it is a loss, you debit the income statement and you credit the asset disposal account. This brings us to the end of a presentation on depreciation. Thank you.